Hi, my name is Brian Burjans.
And I'm Rick Betancourt.
Welcome to Homeownership Heroes.
So what do you want to talk about today, Brian?
Well, today, Rick, I think it's very important for our audience to understand what the actual characteristics of a VA home loan client looks like today.
It's a lot better than what I think a lot of our customers out there think the profile looks like.
Oh, without a doubt. I think when you take back the 80s and 90s, I think people automatically thought VA means subprime.
Correct, without a doubt. And I think that is the furthest from the truth as far as what the credit profile of a veteran really looks like. And I know that the average credit score of a veteran in 2017 was 712.
Yeah, so 712, think about that for a second. 712, if you told a realtor or a mortgage banker, I have a customer that's a 712, they're probably automatically going to think that's a conventional buyer.
And then you go on to describe exactly what other attributes that veteran has, like the fact that on average they have between $20,000 to $30,000 in liquidity as far as assets go.
Yep, and also that their average monthly income is about $7,200.
And their debt to income ratio is actually about 40.2%, which is below what the Fannie Mae, Freddie Mac standard is of 31.43.
Yep. And so when I'm educating realtors or just a room full of people that want to know, they sit there and ask, well, how did that happen? Like what attributed to the fact that this characteristics has changed? Because the myth has always been poor credit.
Well, and I think the fact remains is that veterans, by definition, have always been very good home buyers. I think a lot of that comes from the structural piece of the military lifestyle, what they're told to do, how to do it, when to do it. I think there's obviously, I think we both can agree, there's a bit of lapse as far as financial education goes inside the military world.
Sure.
But you know, when they ETS out and they're in the civilian life, what they learn in that military community comes back to them. And I've had incredible success over 17 years working with veterans to purchase homes.
Yep. And I would also say this too, when you're working on active duty military, to keep in mind too, you know, you got to pay your bills, you got to have great credit to keep your security clearance. You don't pay your bills, you have bad credit, you lose your security clearance, you get fired.
And I don't think I've ever worked with an officer. And there unfortunately is a bit of a delineation in credit scoring between your enlisted personnel and your officers. But I've always had very good success with our officers. 01, 06, 07s. The credit scores are very good. I've had a lot of good enlisted personnel too. Incredible credit scores.
Yep.
So I mean, I think all in all, the stigmas behind what the credit profile of a veteran really is, or the timelines that go into VA home loans is way over exasperated, I guess, as far as difficulty goes.
Well, I think, and the point here is for our mortgage bankers out there, our mortgage brokers, to understand that when they have a VA client, to be able to go to bat for that client to say, hey, these clients have a great financial profile, they have a great characteristic,
Yes.
They are better than your conventional buyer, and go to bat for them whenever they're trying to help them buy a house.
And that kind of goes back to one of our previous episodes where we talked about the fact that this is not a loan program, this is an actual benefit,
Sure.
right? So as a mortgage professional, you should be working, or as a real estate professional, you need to understand that you're actually working with this hero on his or her benefit that they earn through their honorable service. So you need to go to bat, go to war, go to the table, whatever you want to, acronym you want to use, or association, you need to be able to do that because they earned it.
Yep. So just think about this. 712 credit score, financially stable, great borrower, closing less than 30 days. Why wouldn't you want 10 of those a month?
Not to mention the fact that the DTIs are below national averages. They have liquidity of almost $20,000 to $27,000, which helps in a zero down payment transaction where even if you had a Tidewater provision or something came up, they can make up the difference. So.
Sure.
All in all, I think it's one of the best financial profiles you could have to purchase a home in today's day and market.
Well, thank you, Rick, and thank you for joining. We hope you found some value in that. Tune in next time for Homeownership Heroes. I'm Brian Burjans.
And I'm Rick Betancourt.
See you next time.
This is Mortgage News Network.